In this presentation, I'll give a brief overview of payment terms and their implications, payment means, and a method of processing prepayment through priority using the predefined payment part. Payment terms are a set of agreements between a customer and a vendor. They cover the date in which an invoice is expected by, any time-sensitive discounts, and the conditions of the sale. There are several predefined payment terms in priority, and new payment terms can be defined as necessary through the payment terms form. Each payment term is uniquely referred to by its code. Using the end of month field, we detail whether the due date is calculated from the invoice transaction date or from the end of the month. The form allows for time-sensitive discounts, for instance, payment term 10, in which a 1% discount is applied when paid within 10 days. Otherwise, the invoice is due 45 days from the invoice transaction date in full. Multiple payments are also possible, such as in payment term 8, where a condition of sale allows for 2 installments, which can be further outlined in the itemized payment terms sublevel form. Assigning payment terms is quite simple. It's possible through the financial parameters for customers, in which each customer can be assigned a default payment term, which will auto-populate on all invoices thereafter. The same process can be applied through financial parameters for vendors and will default the payment term in any purchasing document with the specified vendor. This field can always be overwritten per invoice and is pulled through in any subsequent financial documents. Payment terms can appear on the invoice, reminding the customer of the agreed conditions. They also factor into debt and aging, only contributing to an aging invoice report once the terms of the sales are exceeded. When a payment is recorded in priority against the invoice, any applicable discount recorded through the payment term is automatically applied to the receipt. Payment terms are not to be confused with payment means. Payment means are a vehicle in which an invoiced payment is expected to be paid by. Priority-supported payment means include interbank transfer, check, credit card, cash, etc. You can record several means of payment on top of Priority's predefined records in which you expect to make payments. Some customers only produce goods after the order has a guarantee, sometimes through a prepayment or partial deposit. For deposits, I like to use the prepayment method that utilizes the Priority predefined payment part. First, you set up a sales order with the specific part requiring a prepayment or deposit. In the Payment Info tab, enter the percentage advance payment to deduct field and enter the percentage of the total invoice amount to be considered as a deposit. Then you can confirm the order. To invoice the prepayment, create a multi-shipment invoice referencing the sales order number. In the Financial Terms tab, flag the invoice for advance payment. Now, rather than list all the order items from the sales order, the invoice item sublevel form displays the prepay part with a quantity of 1. After finalizing the invoice memo details the prepayment amount owing. When the full invoice is due to be paid, say it's been built or it's ready to ship, create an invoice in the multi-shipment invoices form to bill the remainder owed. Select the customer, the order number in references, and notice that all line items as well as the payment part are visible on this invoice. This is automatic. The prepay unit price is equal to the exact amount sent as a prepayment earlier, and this is automatically deducted from the invoice. The invoice is now ready to be finalized, and the invoice memo details both invoices.